From Hamilton Place Strategies in Washington, D.C., this is the HPS Insights Podcast.
Elliott, we just wrapped up a great conversation with your friend, Amit, of FinClusive. And I got to say, I learned a lot and found it really interesting, the work they're doing, both as a sort of hybrid, as he described it, of regulatory tech and then fintech. I think our listeners are going to love this one. What'd you think? How'd he do?
Well, I think Amit is a master of the nuances in a lot of these intersections, right, Bryan, where we're kind of exploring, like, where does crypto come across mainstream financial services, come across KYC, know your customer laws, where do those things all intersect? Amit and the team at FinClusive are literally in the pipes, making sure everything goes where it's supposed to go to the people for whom it is intended, right? And Amit is building these tools that explicitly address some of the things that can go wrong across all of those sometimes, frankly, conflicting processes, all with the ultimate goal of bringing more people into the financial system and including more people in economic growth. I think I love the point he makes about financial inclusion is a national security tool, right? For a long time, we've had rules based on national security, perspectives that have essentially taken people out of the financial system, for better or for worse. And what we have now with crypto, with some of these risk and compliance tools, is the opportunity to bring those people back in. And I think that's a really, really powerful, a powerful opportunity. And it was great to get Amit's perspective, not just on that, but on some of the plumbing and some of the future of crypto. He's an expert. I thought it was a great conversation.
Yeah, I agree. And one of the things I'm really happy with is when you and I had this idea a couple of weeks ago, we did not want to do a What is Crypto podcast series. We really wanted to just bring in different folks who are approaching this from all different angles and get a little deeper in the work they're doing. And this was a great episode to start this series with, because the work he's doing is really fascinating, and you see how it fits into what is a really growing space in the crypto world. So I hope our listeners enjoy this one as much as I did. Here's our first episode in this series with Amit Sharma, CEO of FinClusive. Welcome to another episode of HPS Insights, a podcast from Hamilton Place Strategies, analyzing current events impacting the business and political communities. I'm your host today, Bryan, DeAngelis, a partner at HPS, and am excited to kick off with one of my colleagues, a new series of episodes focused around cryptocurrency. We're going to be doing several crypto conversations with folks from the industry, folks who are working in and around Capitol Hill on some of the regulatory structure, folks who have been in this business and the broader fintech space for a long time. And we'll try to get a good sense of where things are heading in 2022 around this growing financial ecosystem. am going to be teamed up throughout most of this with my partner in crime, Elliott Owensby, who is a senior director here at HPS. Elliott, we've got a great guest for today's show, and we'll likely kick off our series. You've been working with Amit for a while, so why don't I turn it over to you to kick us off and introduce our guest?
Yes, I would say, to borrow a phrase from our friends at Odd Lots, we have the perfect guest today to get into a little bit of the intersection of fintech and regtech and crypto, and I guess what we have to call fiat now. But that is Amit Sharma, who is the CEO and founder of FinClusive. FinClusive is a fintech, regtech firm right at the cutting edge of compliance overall, and compliance as a service that ranges from global businesses, and in particular a focus on the and underbanked communities across the world. Amit, we're fortunate to have you and your expertise, not just in, whatever you want to call digital finance and crypto, but your experience as a senior advisor at the Treasury Department, in the Office of Terrorism and Financial Intelligence, your experience at Mitsubishi UFJ as chief of staff and a leader in the global markets division. So suffice to say, Bryan, we've talked about how awesome it is to talk to folks that do something different than what we do, that have that practitioner lens. And Amit, we're glad to have you. Welcome to the podcast.
Well, thank you both for that great intro. And it's really a pleasure to be here. And it's really been a pleasure working with your esteemed group on all things FinClusive in our early growth. So much appreciated.
You bet. Of course.
Great.
So maybe the place to start, Amit, is just, so to me, I have a little bit of insight into FinClusive and the growth of the business, your vision as you set out to, now at this point, almost maybe 5 years ago, set out to develop an innovative new product on the kind of compliance front that has a lot of intersections at several points in the financial services system, and several really, I think, tremendous kind of value adds for several of those stakeholders. So maybe the place to start, and then we can jump in to kind of crypto world and all that. We'd love to hear a little bit about FinClusive and kind of your vision and your roadmap as you kind of continue this really impressive growth.
Well, thanks very much for that. Well, I'll start by just saying, as you pointed out in the intro, FinClusive is a bit of a hybrid. Financial technology and a regulatory technology company. And as you can see from our name, FinClusive, our true north is financial inclusion. When most people think of financial inclusion, they think about how do I get a product or service from the banking space into an otherwise underserved population. And normally it's low, moderate income or poor countries, thinking about very innovatively, how do I extend credit, small business lending to individual credit? How do I give access to bank accounts so I can store the value in an insured account for someone that's unbanked or underbanked as they were? How do I get money cross-border, because so much of the international payment system that folks rely on for just plain vanilla remittances from rich countries to poor countries and the like? These are all really noteworthy development objectives that financial inclusion hits. We take a bit of a unique approach, and that unique approach is really informed by, as you pointed out, my background being on the government side at the U.S. Treasury Department, being in the banking side, international payment side, the technology side. And really, it's mindful of incredible growth and innovation that's happening in financial services. So there's 2 or 3 quick trends that really inform what the core value proposition of FinClusive is. One is, as you can imagine, many, many products and services are being innovated outside of mainstream traditional banks, right? So the whole idea of DeFi or decentralized finance, mobile banking, peer-to-peer, these decentralized systems, providing connectivity directly with no financial intermediary, right? You don't have to go to a bank to send money to someone else's bank that they can get money from. You can now send value literally from your mobile device directly to another mobile device across the planet. You can do so digitally. You can now do so in all sorts of different types of value, like cryptocurrency and other forms of digital value. So that's hugely exciting because it is providing connectivity the world over in ways that traditional banking has not in the past. So that's exciting from a financial inclusion perspective. But what's concerning to many, both in the sector, in the private sector, as well as for governments and policymakers and regulators, is that same system, that same innovation that you and I think is awesome is also exploitable by bad people. And so how do these new systems that really operationally look nothing like traditional banking, how do they incorporate the essential financial crimes compliance controls of know your customer, and do I know who I'm dealing with, and is the beneficiary on the other side actually the person I'm trying to send the money to? Do they have sufficient funds in their account to be able to debit it and then send that money, et cetera, et cetera? All those anti-money laundering, know your customer elements are equally important. And that's where we come in, is we are a hybrid in the sense that we provide financial crimes compliance controls to that emerging and growing segment of the market that's providing tremendous inclusive opportunities, new products and services in this non-bank, more digitally friendly peer-to-peer environment. But we recognize that compliance is hard, it's costly, it's often redundant, and the average institution, bank or non-bank alike, is spending upwards of a third of its operating budget on governance, risk, and compliance. So it's this expensive endeavor, but it's needed. And so the compliance marketplace is ripe for disruption too. And so from a reg tech perspective, what FinClusive does is it identifies a number of capabilities in that sort of full stack, from onboarding and knowing a customer at the outset, to validating them on an ongoing manner, to tracking transactions and making sure they're not going to bad people, making sure global watch lists are screened, making sure that we're running analytics on that, on those transactions and those clients. All of those capabilities we bring in one service workflow, and we create it So it's equally applicable to the most traditional small community bank or credit union or the most sophisticated global fintech company or crypto exchange. And so you have to create a user interface that is applicable to both those environments. And then the second thing we do is we connect these emerging, amazing, innovative financial services coming from DeFi and crypto and the like, and we connect them to mainstream banking so that a fintech company providing small business lending to entrepreneurs in Africa can actually hold that value in an insured account in the United States and can access that value anywhere in the world. And so that connectivity between the new technologies, new fintech applications, new decentralized financial services to the old, which is, plain vanilla deposit taking and insured deposits and access to the ACH rails and the wire rails, all these things that you and I take for granted. That's the intersection. And that's the space that FinClusive occupies. Those are the products that we service.
You just touched on something that I think really nails the whole, exactly what's happening in crypto right now, right? Which is there's a lot of exciting stuff. There's a lot of new birth, a lot of new development. Things are taking off, but folks are slamming into those challenges that government or, the big actors have been dealing with for years and are well prepared for. I don't know if either one of you caught it. There was a big spread in the Wall Street Journal this weekend about NFTs and OpenSea and the amazing growth they've had, but now they're dealing with copyright issues, patent problems. Is the person on the other end of that actually real? Are they just ripping off someone? And how do they deal with all this? It sounds like you guys are at the same time a little bit on the cutting edge of let us fill this painful kind of gap period where you've gotten hot enough where you're taking off, but now you're running into some real roadblocks. Let us get in there and help you before those roadblocks become a big problem for your business. Do I have that right?
Absolutely. But I'd go one step further. And that is, innovation always breeds this fervor, right? New technology applications. I mean, look no further than just the advent of the internet. When the internet came about, so many content producers were putting information there and they're saying, now I can share all of this information in the information superhighway. But what were the controls on that, right? How did we monitor that content? How do we provide access to that content? Was censorship adequate? Was it necessary? How do you do so in a quote less governance space? The financial services industry is a highly governed, highly regulated industry for good intention, right? People's personal information, including their economic data, is out there, and you need
and their personal wealth, right? This comes right down, right?
Just their
money you need
wealth.
For bills,
exactly, and that's from anywhere from my paycheck. I live paycheck to paycheck, and how important it is for me to access my own funds, all the way to just general wealth creation. And all of this has to be, regulated understandably because it's personal data, it's personal financial information. Now, when you go to an environment where there are fewer and fewer to no intermediaries, right? No person in the middle between Bryan and Elliott or Elliott and Amit transacting. Who is that regulator? Who's making sure that I am legitimate, that you're legitimate, that we're not trying to fleece each other, right? That your identity is affirmed by some authority, that the value that I transfer goes to you for the intended purpose. So these are all very noteworthy regulatory requirements. But we are moving those regulations into an environment where literally the operations and the technology stacks of these new applications don't look at all like they do in traditional finance, right? So if I can download an app and put value in that app from some place, who is the regulator, right? When a number of when the Taliban took over in Afghanistan, you actually saw a number of people take their mobile phone out and download Binance wallets. Well, that's amazing. If you think about that kind of connectivity, who's the regulator, right? Who's making sure? And so these are all the noteworthy questions. But the other side is also true. The fact that they could do that was awesome in a lot of ways, right? That kind of connectivity. So we sit at an intersection where right now we have to be facilitative of innovation in the best manner possible, but we have to also equally ask, should I, as many times as we ask, can I? And when we ask, should I, it's not to stifle innovation. It's to effectively say innovation must continue to be thriving, but how do we also put in self-incentivizing governance controls to make sure that you and I are acting in transparent manners and safe manners, not exploiting others and the like. And that's what's exciting. So navigating the space is exciting, but it's challenging because there's a lot of noise when people don't really understand some of the innovations that are happening, some of the products and services, and they get swept up in the herd mentality. Oh, I need to get involved in NFTs. I need to get involved in these alternative coins, and I need to get involved in digital currencies. But what does that mean? Because that universe is pretty large, and distilling that and wrapping some controls around it are part and parcel of what we do.
I was just going to say, Amit, I mean, you had a series of great conversations with the team at the Wall Street Journal last fall. And with the withdrawal from Afghanistan, I think that's a great sort of microcosm of where a lot of these kind of factors have come together. And it relates in a lot of ways to, I know, what is one of your sort of, abiding interests, and which is the intersection between sort of anti-money laundering, anti-terrorist finance, with financial inclusion and the tension that may be inherent there, right? I always think back to, some of the work you've done with platforms like LaunchGood, where, there is an inherent de-risking in the financial system, not necessarily, I would personally argue, Amit, you may feel differently, not necessarily, a malicious de-risking, but in order to meet current, banking regulation, there have been times where certain types of organizations, certain types of people, based on their transactions and the pattern over time, aren't able to use mainstream financial services in the U.S. specifically, like we might think about it. And I think I'm gonna speculate a little bit that part of the growth, as you say, in cryptocurrencies and in digital wallets, in some of the sovereign identification tools, is rooted in part in those restrictions that folks currently face, rightly or wrongly, in the context of the U.S. financial system. So I wonder if whether it's LaunchGood, whether it's Afghanistan, I wonder if you might go through kind of a little bit of a case study in how those factors kind of correlate. And then, obviously if inclusive, that's right where you all sit. You sit right in the middle of that whole kind of web. And I think it's a perfect example of where you all add an incredible amount of value.
Absolutely. And you hit the nail on the head. It's been a journey, and that journey has informed not only our business and the value proposition, the products and services we bring to market, but that journey is constantly evolving. So taking a quick step back contextually, you're absolutely right. In a post-September 2001 world, after the tragic events, of September 2001, there was a concerted effort by both the U.S. government and our international counterparts to say, the international financial system is exploited by bad people. How do we put tools and requirements in the financial sector, meaning banks, non-banks, those organizations you and I all go to hold a deposit, get a loan, send money, etc. How do we put rules and controls there to say they will be the sharpest point of the spear, right? They will say, They will understand who their customer is. They'll make sure that they understand who that customer is. They'll monitor those transactions and the like. Again, the intentions were all solid. However, the pendulum always swings always swings too far. And sometimes that has some negative repercussions and unintended consequences, right? As a result of many of those controls, certain segments of the economy, certain types of transactions, certain customer types, certain jurisdictions were simply labeled as high compliance risk. Money service businesses, nonprofits, international remittance flows, low moderate income countries, right? Even emerging technology and non-bank financial services. These were considered higher risk for quote unquote potential exploitation by money launderers and terrorist financiers and other bad people. So when you put this guidance out there, maybe even with the right intent to say, hey, XYZ banks, make sure that you're doing the right scrutiny of those customers. But banks are going concerns, they're profit-making institutions, and they're now being given a law enforcement set of objectives, right? These activities that they never really were trained to do, but they're now forced to do that, pay for doing so. And they're saying, well, wait a second. On the one hand, you're telling me certain segments of my customer base may pose a higher risk, and I therefore have to do more to understand and mitigate that risk. And at the end of the day, any economic agent, any organization that has a profit and loss line is saying, well, if it's going to cost me more to actually do that diligence and monitor that customer, then I'm going to get in potential revenue. They've got a business decision. And too often, and unfortunately, that business decision has said, well, if nonprofits and crowdfunding platforms are inherently higher risk, and the government has told me that, and I have to then put in more controls to govern that risk, what value does it pose to me? And unfortunately, more babies have been thrown out with the bathwater. In other words, more traditional financial institutions have said, you know what? I'm just going to not do business with fill in the blank. And the fill in the blank has been low, moderate income individuals, poor countries, international remittances, money service businesses, et cetera, nonprofits and NGOs. And therefore, organizations like LaunchGood, a wonderful organization, a crowdfunding platform, Muslim affiliated, that enables NGO campaigns all over the world to raise money for amazing causes. And many of them are very plain vanilla low risk causes, but some of them are higher risk, right? Refugee assistance for Syrian refugees crossing the border in Turkey, or now the Afghan crisis, right? Absolutely vital humanitarian assistance that literally constitute higher risk. And certain payment facilitators and banks say, oh boy, if you want me to send money to and from counterparts in these markets, you're going to ask me to do all this due diligence. It's going to cost me a certain amount. It's going to net me a certain amount of value. Do I do this business, or do I risk getting sanctioned or fined by my regulators? And too often, they just say, I'm not going to do the business. And LaunchGood had a real struggle because many just wouldn't take the business. We said, we can help you. And so we implemented a very robust compliance engine, our compliance as a service, as you pointed out. So we can do that last mile vetting because we've got a global network that can look at those frontier and emerging markets and really evaluate the NGOs on the ground, the beneficiaries on the ground. And they use our accounts and payments functionality to be able to move that money. And they can do so with full transparency. So they're doing the right things, and you end up realizing that much of financial services is not managing to actual risk. They're managing to perceived risk. And that's the core value proposition we bring to bear, is that let's really understand the actual risk and not manage to a perception of that risk. And so as we move forward from my days at Treasury, part of this, I joke about this, FinClusive is a bit my penance. We created an environment where a lot of organizations were, quote, de-risked. They were just wholesale debanked. They were just pushed out of the banking system, and they were very legitimate organizations serving very legitimate causes and clients. We need to bring them back into that service. And one of the things that I lament in my time in government all the way to now is that we tend to overinvest in the sort of punitive national security enablements, and we tend to underinvest in the positive enabling environments that really provide greater financial inclusion. And I would argue that the more organizations and individuals that are provided access transparently and securely, then the greater economic resilience we are able to provide, and the better it is for our broader national security objectives. So financial inclusion should not be a sort of binary choice when you're doing national security. It should be part and parcel to the national security and anti-money laundering frameworks. We should be driving inclusion at scale because it is inherently good for our economies and our economic resilience, and it actually helps us manage the anti-money laundering risks that many of these organizations, jurisdictions, and other would-be perceived compliance risk customer segments may pose to the system.
Amit, I don't want to make you answer the meme question on Twitter, right? Like Bitcoin solves this, right? I think Jack Dorsey made that reply pretty famous as people complain about different things that they experience in the financial services sector. But what's your view on how crypto, and I'm going to put that in big air quotes and reference the whole ecosystem, right? You guys work with wallet providers, you are affiliated with the Stellar network and an anchor and a node on that protocol. From kind of tip to tail, what's your view of how crypto, in the biggest sense, is going to shape how these processes, whether it's literal products, whether it's regulation, whether it's payment rails or beyond. What's your view of how that's going to affect these obstacles that you all are out to address?
It's a great question, and part of the answer is embedded in the question and at least how you phrased it. First off, the crypto universe is massive. There are literally thousands and thousands and thousands of different cryptocurrencies, and let's not forget the digital formation and transfer of value has existed for decades.
This is something Elliott and I talk about a lot. But yes,
for
continue.
Decades, yeah. But what is exciting about the quote crypto universe is really the underlying technology that makes crypto possible, right? Blockchain and distributed ledger technology is exciting. Why? Because there are attributes of that technology that enable many things that weren't enabled in a financial intermediary environment. Mm-hmm. One, you can transact now peer-to-peer in ways that you couldn't without financial intermediaries, in the mix. The blockchain enables those individuals on a ledger that is, quote, immutable, meaning that it can be audited. That's hugely exciting from a financial crimes compliance perspective, from an anti-money laundering perspective, from a law enforcement perspective, right? These tools allow you to sort of trace transactions while at the same time protecting issues of privacy, right? You can now have individuals transacting on a ledger without full disclosure of their underlying social security number and address and wallet ID and account number and the like. You can do these things under the underlying technology. And then crypto also has, there are hundreds and hundreds of so-called stable coins, right? Tokens that are issued that have a backing of some currency or a basket of currency or a physical asset and the like. There are a number of alternative coins that are not backed necessarily by an underlying asset, but they're traded in the open market. And now there's the advent of central bank digital currencies. So the crypto universe is massive. So my first take, is that understand what you're talking about within crypto and its applications to then understand what the inherent risks are. So we can't make blanket statements like Bitcoin solves all of this. The underlying technology certainly gives us a pathway to do things both, differently, securely, and more efficiently than what are otherwise quite inefficient and cumbersome strategies right now. Today, we have to attach your underlying information to payments across 3 or 4 banks. Well, that's a tremendous disclosure of your privacy information. You can do that now with blockchain without disclosing that information, right? You can access your funds. What's exciting about blockchain technology and those that facilitate crypto transactions is we can now transact near real time, where many financial institutions take 2, 3, 5+ days to settle a transaction. Sometimes that's even accessing your own paycheck, right? Depositing a paycheck, and you can't get access to your own funds in 3 days. Well, if I live paycheck to paycheck and my utility bill is going to needs to be paid, I go without electricity. I need those funds real time. So the underlying technology has tremendous inclusive opportunities. Absolutely. Now we have to evaluate are the enablements that we're using that technology really solving those problems? Bitcoin is extremely volatile. Do we want low, moderate income individuals only transacting in an otherwise volatile instrument, right? Or do we want something that really is stable, right? These are the kinds of questions we need to ask, and we need to parse the details matter here. We need to parse the differences in different kinds of crypto, different kinds of digital assets, and what technologies and what payments rails they're transacting. And let's not forget too, crypto is growing immensely. Literally trillions and trillions of dollars are being transacted for payments and the like. But the vast majority still are being transacted on traditional payment methods, right? SWIFT transactions, ACH transactions, and the like. So we need to bridge the old and the new. We're not going to just jump into the new wholesale and expect everyone to get there. Digital inclusion means we need to handhold literally billions of people and organizations to make that leap into this new economy with these new technologies.
Amit, I'm going to wrap this up with maybe an unfair question for you on that exact last point. Can the U.S. do that, in your opinion? Can we find that bridge that avoids either overregulation that kills a lot of the great innovations we're seeing, overregulation that forces a lot of this maybe overseas, which a lot of these major cryptocurrency companies are, headquartered elsewhere, or there have been talk that if the US does some things, then folks, you hear it all the time, will have to move overseas. Can we get to a point here where we, as you say, hit the right bridge of the right regulations that keep this innovation and this great technology going forward?
I am optimistic that we can for 2 or 3 important reasons. The first is, and I mean this wholeheartedly, I'm glass half full, and in just a life lived glass half full is a better life, I find, right? So instead of thinking that there's no way the U.S. regulators can sort of get there, I believe, and having been in the seat before, our team is comprised of former regulators from the Fed, from the Treasury, et cetera. The people want to do the right thing. So I'm long that, and many of our colleagues that are continually, they continue to work at the Treasury, at the OCC, at FinCEN, at the Fed, et cetera. There are many that want to do the right thing. The second reason why I'm optimistic is because there is as much, if not more, and a growing pull strategy, meaning a non-U.S. pull strategy. The days of the U.S. really having the superior, dominant, regulatory posture are quickly dwindling, right? Yes, is the U.S. currency still the reserve currency around the world? Is it the currency in which many commodities like oil are priced? Yes, all of that's true. And sort of the dominance of the U.S. marketplace in terms of its capital markets, thriving capital markets to raise money, the power of the dollar, the stability of the dollar continues, absolutely. However, these alternatives are challenging that notion. And when you have alternatives, that's the best mother of innovation. And because innovation in the private sector is going at pace, regulatory innovation has to now keep up. So the U.S. regulators are more actively seeing what's happening overseas and are being pulled to act in ways that others are forcing them to. And the third is that we are less and less year on year engaged in an intermediary environment. In other words, one that we are reliant on someone else to conduct financial transactions on our behalf. We now can transact direct. And the more we can transact directly, certain inefficiencies are starting to reveal themselves in pretty robust ways. Think about the PPP program for COVID. Think about the relief program that, literally hundreds of millions of dollars had to get in the pockets of people in need. How much fraud, leakage, and waste was happened because the number of literally hard checks and stored value cards were sent to people that could have been an instantaneous value transfer from the government to their digital wallet. It's not a technology problem. Those technologies exist today. And governments and regulators are feeling that pressure. And I think those 3 elements together, I believe that U.S. regulators can find that balance because they're forced to engage with international and see the writing on the wall in that way. And I'm optimistic that way. I think we can find that balance. And the final thing I would say is that you are seeing U.S. companies go overseas. And if we want to stay competitive, we are going to want to ensure that we've got a healthy innovation environment, a capital markets environment, and regulatory environment. Because without that healthy and incentivizing regulatory environment, you then can actually push those companies away from the U.S. market. And those pressures, I think, will push U.S. regulators in the right direction.
Great. Well, that was helpful. And this was a fascinating conversation. I appreciate you coming on, and Elliott, appreciate you introducing us to Amit and the great work you guys are all doing at FinClusive. I hate to do it, but I think we have to leave it there, and we'll have to put a pin in this conversation and have you back on sometime soon, Amit, because this was great.
We're going to call you on some of these predictions, Amit, okay?
Great. Well, thank you to all our listeners for joining us. Look forward to a couple additional episodes of these cryptocurrency conversations that we'll be having here at HPS over the next few weeks. In the meantime, you can find all of our podcasts on our website at hamiltonplacestrategies.com, or you can follow along on Twitter at HPS Insight. I'm your host, Bryan DeAngelis, with my co-host, Elliott Owensby. As always, thank you for listening to HPS Insights.
Thank you for listening to the HPS Insights podcast, produced by Hamilton Place Strategies. For the latest updates, follow us on Twitter at HPS Insights, and follow us on the web at hamiltonplacestrategies.com.